Well, to better understand Microsoft's latest earnings and also its recent deal to buy Activision Blizzard, I'm joined by Thomas Hayes. Thomas is the founder and chairman and managing member of Great Hill Capital. Welcome as always.
Thanks for having me, Rochelle.
So first of all, what do you make of what we're seeing with Microsoft's numbers and their share price?
Yeah, as far as the earnings tonight, initially they were down after hours. And the reason is the beat rate of 100 basis points was lower than the recent average beat rates of 333 basis points. However, as you said, they beat both on the top line, the bottom line. Their Azure business was up 46% year on year. That's one of their key growth drivers. And the other key thing is their commercial bookings were up 37% year on year. So overall, the earnings were good. And actually, after the earnings call, the stock actually went from being down 5% after hours to being up 2 or 3% after hours. So we'll see how it opens tomorrow, but it does look like there was a reversal and that the earnings were good enough and possibly the guidance was strong enough on the earnings call to take it from -5% to plus 2 or 3%.
Now, obviously, a lot of people still watching Microsoft in terms of this Activision Blizzard deal. What does Microsoft hope to gain from making this investment, and why now?
Yeah, well, it's a no-brainer. They had the advantage of the different harassment problems at Activision Blizzard, brought the price down. Microsoft scooped in. And, you know, even with Azure and cloud as a growth driver for Microsoft being up 46% year on year, they do need future avenues of growth moving forward to justify their relatively high valuation. Microsoft has done a number of these type of acquisitions over the last decade with the Minecraft developer at $2.5 billion. They did ZeniMax for $7.5 billion in 2020. And this will make them, the Activision Blizzard deal will make them the third largest player in the gaming business behind Tencent and Sony. So the other thing of note, Rochelle, is when they announced this deal, they also said that they had 25 million users on their Game Pass platform, Microsoft did. This is kind of like a Netflix of gaming. It's subscriber-based, $16 a month. That equates to about $400 million a month, $5 billion a year. If you add Activision Blizzard with the millions and millions of people who want Call of Duty and some of their other franchises, that could add millions of new users onto the Game Pass subscription platform. And as we know, subscription-based businesses command a very high multiple, and that would be a very good thing for Microsoft moving forward. The other possibility is that they make Call of Duty available exclusively through their platforms. I think the Department of Justice is probably going to ask for a concession in order to approve the deal, that they don't do that, but there are some people worried about that right now.
So then if this does go through, you have Microsoft, which already has a large video game market, will have an even larger slice of the video game pie, but you also have your Googles, your Facebooks, everyone sort of edging into that traditional space that was, you know, reserved for the Sonys of the world. With that in mind then, what is really in it for consumers?
Yeah, well, I think there are a few things. First off, this brings Microsoft into new territory, mobile gaming, virtual and augmented reality. As you noted in the press release, they said this will provide the building blocks for the metaverse. And when that happens, it's going to give Microsoft a lot more data. Mobile gaming apps give you phone usage behavior, gives Microsoft location tracking, and the augmented reality gives biometric data. With these billions of data points per user, it will enable Microsoft to customize and develop games that the consumer wants specifically, and that will give them an advantage. So consumers will get more of what they want more quickly, and it'll make Microsoft a bigger player in the space.
So if you're a rival gaming company like Sony, who we did see their shares take a hit when this acquisition was first announced, what does this mean for their strategies as well as game development going forward?
Well, I think they've got to get bigger. The only thing that I would suggest that they do, number one, is they file a complaint with the DOJ not to approve the deal unless Microsoft agrees to keep Call of Duty and other key properties available to all platforms. Don't just put it on the Game Pass. And the second thing Sony needs to do is they need to start looking at what's available. You got Electronic Arts, which has the Madden franchise. That would probably go for $37 billion. You've got Take-Two Interactive, which has Grand Theft Auto. That might go for $17 billion. And then you have the streaming platform of Valve, which would compete with Game Pass. That could potentially go for $10 billion. So I think Sony needs to get active pretty quickly. to offset what might have put them at a slight competitive disadvantage due to this deal.
Well, lots of fast-moving details there. Thank you so much. Thomas Hayes there, the founder, chairman, and managing member of Great Hill Capital.